Welcome to The Explainer. Today, we're going to tackle a huge piece of personal finance advice, the idea that just patiently investing in the S&P 500 is your golden ticket to wealth. We're going to dig into why, for most people just starting out, this is actually a pretty flawed strategy. And more importantly, we'll get into what our source material says is a much faster way to build real wealth.
This one quote right here, this is the foundation for everything we're about to talk about. You know, conventional wisdom tells us that a steady 7% a year is the key to financial freedom. But what if that's only half the story? What if that advice is actually for people who are already rich, people who are playing a completely different game than the rest of us?
So that brings us to our first big idea, the 7% illusion. We're going to break down why that common advice to just buy an S&P 500 index fund and just wait is a strategy for keeping your wealth, not for creating it. And that distinction is absolutely critical if you're not already wealthy.
Okay, so you've really got to understand this. There are two completely different financial games being played out there. The first one, that's the keeping rich game. This is for people who already have a ton of capital. Their main goal is just to preserve it, right? So they use low-risk, slow-growth tools like the S&P 500. But the second game, that's the getting rich game. And that's for pretty much everyone else. Here, the goal isn't just preservation, it's about rapid acceleration. And for that, you need a completely different playbook.
Now let's talk about the hidden danger of this slow and steady approach. The problem isn't just that the average returns are kind of low, it's that you can get stuck in these brutal decade-long periods of stagnation where you are basically going nowhere. And that lost time? That's a cost you can never, ever get back.
Just look at this number, 1%. And this isn't some hypothetical. For 13 years, think about that. From the dot-com bust in 2000 all the way to 2013, that was the actual average annual return of the S&P 500. You could have been diligently investing for over a decade, a huge chunk of your working life, only to look up and see your money has barely grown at all. That's not just a low return, that's a massive opportunity cost.
So right now, you might be thinking, okay, fine, I'll just pay a professional to beat the market for me. But the data here tells a really brutal story. This comes from the Spiva report, which tracks how professional fund managers do against the S&P 500. And as you can see, whether you look at 1, 3, or 5 years, the huge majority of them, they fail. They fail to beat the index. This is a classic trap. People pay billions and billions in fees for professional advice that, on average, actually gets them worse results than the slow, passive option we just talked about.
So, if passive indexing is the slow road, and the professionals who are supposed to be experts can't even beat it, where does that leave someone who's actually trying to build wealth? Well, this brings us to the really powerful alternative that our source material proposes, building your own personal alpha engine. All right, let's break this down. In finance, alpha is just a fancy word for your advantage, your edge over the average market return. The pros, they fight tooth and nail for a tiny 1% alpha. But personal alpha, that's a whole different ballgame. The idea is that instead of chasing a tiny edge in the stock market, you should create a massive edge by investing in the one asset you have total control over, and the one whose potential return isn't capped at 7%. And that's you.
This quote from Robert Kiyosaki really just gets to the heart of it. Your starting capital, your cash, might be limited, but your mind, that's an asset with unlimited potential. Training it well by investing in your own knowledge and skills, that's what unlocks the kind of growth that can create enormous wealth, way beyond anything an index fund could ever do for you.
But look, this isn't just some feel-good motivational idea. It's a concrete, actionable blueprint for shifting your most precious resources, your time and your money, away from a low-yield strategy and into one with massive potential.
According to our sources, real financial intelligence is built on these 4 specific pillars. Think of this as your new curriculum. First up, accounting. You got to learn the language of money. Second, investing. Understanding the real science of how money grows. Third, markets. Mastering the basics of supply and demand. And fourth, the law. Knowing the rules around taxes and corporations so you can use them to your advantage. This is the foundation of your personal alpha.
And building on top of that foundation, the source material points to these specific high-leverage skills. Notice, these aren't academic theories. These are practical, real-world abilities. Managing cash flow, systems, and people. That's the core of any business. And maybe most important of all are sales and communication, the ability to get an idea across, negotiate a deal, and persuade other people. These are the skills that really, truly pay dividends.
Just let that sink in for a second. It's such a powerful way to reframe things. For so many people, the gap between where they are now and where they want to be, it isn't a lack of money to invest.
It's the lack of a single, crucial skill, like sales or marketing or negotiation that, if they just learned it, could unlock exponential growth in their income and their opportunities.
So, what does this all boil down to? Well, it's a fundamental shift in your entire financial mindset. It's about consciously deciding if you are playing the game to win or if you are simply playing not to lose. And as we're about to see, those are two completely different games.
Let's really break this down. The not-to-lose player, they're driven by fear and a need for safety. Their whole strategy is diversification. Spreading your risks so thinly that you can't get hurt, but you also can't really win. The result is that slow, quote-unquote, sensible growth. But the playing-to-win player, they're driven by opportunity. Their strategy is focus. As the source material argues, successful people are not balanced at the start. They are focused. They make a concentrated bet on themselves, investing everything into their own skills and ventures to get those massive returns.
So here it is, the new blueprint. And look, this isn't about recklessly throwing your index funds away, not at all. It's about using them for the right job. The S&P 500 becomes your safety net, a place for your long-term, hands-off savings. But your active capital, both your time and your money, that becomes your growth engine. This is what you use to build your personal alpha, investing it in courses, books, and ventures that have the potential for returns of 100%, 200%, or maybe even more.
And that leaves us with one final, powerful question to think about. The traditional path tells you to invest your limited capital for a very limited return. The alternative we've explored today suggests you invest first in your limitless asset, your mind, to generate potentially unlimited returns. One is a game of scarcity, the other is a game of abundance. The only question is, which game are you going to play?